the Stock Market Morning Prep video for Thursday, June 26th. Markets had a green day, just under 1% across the board. Dow Jones up 49, Nasdaq up 29, S&P up 9.5, almost 10 points, and the Russell just about the same, 9.5. Markets really have no memory, and the funny thing about it is we had the revised GDP. They rallied the negative print when the original GDP number came out, and based on saying, oh, it's the snow, it was the bad weather. So the market participants basically discounted it, and markets rallied from there. Well, they came out yesterday with a negative revised GDP that it wasn't the snow, and the markets rallied anyway. So that goes to show you the how significant the uptrend is in the marketplace. However, the markets were very, very quiet. There's almost no volume. It was okay, but it wasn't anything great. So the markets rallied down a little over 1%, and markets rallied up just under 1%. So, you have a wishy-washy market. I know it sounds silly, but it is the truth. We are still at these major extensions, extremely overbought. And what is going to rally this market? We don't know. Nobody knows. So we want to just stick with the trend, buying stocks that have at least have given it back, whether it be a downgrade, an earnings miss, negative earnings guidance. That's what you want to look for, stocks that have been basing. You don't want to be chasing these high flyers, the stocks that are running up 30, 40, 50, 60, 70% or at their highs. How much more can buyers continue to push this market higher? But if you don't have any sellers, we will continue to just be in grind mode. But what happens is when the markets do sell off, that grind mode of being up 8, 9, 10 days in a row is going to get wiped out in 2 days. So that's the problem that we're having. So don't load up the boat long. Do your own market analysis. Make sure that your market analysis, you're comfortable with what I'm telling you. Remember, it's your money. You're putting your money to work for yourself. So just make sure that is the case. Now, yesterday, I showed you a couple of indicators. I'm not going to show them to you again because it is a short video, but it is still holding true. We do have market divergence in the breadth of the market, the advanced decline, and I want you to be aware of that. Okay, until it goes away. When that goes away, then I'll be a little more. I could be a little more aggressive intraday. I'm not looking to hold anything for more than a couple of days, 2 or 3 days. We get a nice big push up from the end of the day. We get follow through in the morning. That's where, and then I'm going to be looking at trail stops to get out of that because I'm just not interested in holding something overnight where one thing could really rattle the markets, and that's really pretty much it, and that's the top. And now I'm long a bunch of stocks here, so I'm not looking to do that. Can the markets go to 2,000 in the S&P? Absolutely. I mean, as ludicrous as it sounds, it is possible. So just keep that in mind. I'm just going to run through the indexes today. It's going to be interesting to see what happens. We're coming into a holiday week next week, and every once in a while we get these holiday reversals. Not going to happen today. I do think that coming to the end of the month, it's going to just help the markets push this market higher because we have mutual fund inflows that are coming in, and usually it's the first couple of days of the end of the last couple of days of the end of the month to the first few days of the beginning of the month. So you'll have June 3rd, 29th, 30th, and then you'll have the 1st, the 2nd. Don't forget, we're off on next Friday in the U.S. for the July 4th holiday. So we could have a pretty much of an up day for the next 5 days. I mean, we just don't know. And the way this market is trading, it's just not trading off of really good technicals. Lots of divergence out there. Markets don't even care. There's no sellers. And, again, doing it 27 years, I've never seen a market like this well bid up. And having a negative GDP print is just insane how this market, nobody wants to take a profit, especially when you have no growth. You have negative GDP. It's just crazy, and your market's fairly valued. And now the market's just based on what the Fed is doing. It's just simply that's exactly what is happening. Whatever the Fed does, we keep pumping money in. I'm buying stocks, and the Fed is squeezing everybody to purchase stocks, and that's not good. It's going to end in a bad way at one point in time. Do we look to be a worry word and one of these guys that you got to short the market here? No, absolutely not. You stick with the trend. The trend is your friend, and right now we have a strong uptrend regardless of the fact. Can you short on weekdays? Sure, absolutely. You want to do that. You'll get more bang for your buck on short days. When you have these grind modes, sometimes you just can't find anything that's really worth it because what happens is with lack of bids, other than just a grind, it'll come up It'll grind higher 10, 20, 30 cents. And next thing you know, one candle, two candles back down to your entry, or you get stopped out, and then the move happens again. So you have to keep them wider. You have to, and also reduce your share size. And they're far and few in between if you're looking for intraday plays. You just have to continually monitor. I have a big watch list, and I look at my watch list. And if there's nothing to do in my watch list, I take a step back and I wait for the next day and start looking to prepare for the next day. All right, I'm going to run through the indexes real quick. There really is no change here. We had an up day. We had a previous day we took down. But what is it? What is this here? What is this happening? This is just another bull flag here. And we're at the second extension. Yes, we are overboard. We have minimal volume. But we did unwound the daily chart of the RSI being extremely overboard up in here. So we did sell off. And now we're making another bull flag into the 20 EMA. So we'll see. Let's see if this market has continued legs. Right now it has no memory. So one day up, one day down. There's no trend at the moment. Same thing as you can see with the diamonds. You see a bull flag here, flagging, pull back, and you see it's repetitive pattern. It's the same thing here, same thing. So now we want to see do we break out of this pattern here? So this is going to be the key. And remember, the diamonds did not hit the second extension, where a lot of the other indices have already. So this may be playing catch up. Minimal volume again, so volume is always a culprit, but just be careful here. Transports. Well, transports, we have this long channel. Just want to show you from all the way down here from last August. And if you just open this up, and I'll bring this back out again, you'll see there's three trend lines: upper, middle, and lower. And this is valid. This is extremely valid. And as you can see, we came up to the 20 and held the 34. We bounced back up, and now we just made a higher low from this previous low, which is bullish. So you have to kind of watch. Does the market, does the transports continues to grind higher all year? I mean, it's possible. I don't think so. I do think the markets will. I think the transports will show some sign of weakness, especially when you have the catalyst of being oil, and when oil does break out again, which I think it will, and when it does break to new highs. You have to be careful, because when it does go higher, it rips to the upside, and that's where the fear will come into the transportation sector, and people that have not hedged their oil, transports automatically will just take it on the chin. So I do think that I see at least that the 50-day moving average here of 142.16, if not the lower end at one point between now and the end of the year. IWM, nice big move here, as you can see, right off the 20, big bounce. But we'll see. We haven't taken out the previous day's high, which is here. But again, I do think this is on its way to at least challenge the highs here, okay, between now and next week. And lastly is the Qs. Qs had a very good day yesterday, and it still is below the 1272 extension. So it can also explode and catch that 1618. There's a little bit of weakness in big cap tech, the Netflixes and the LinkedIns and Googles. Well, Google's actually doing very well, but if you do play the NASDAQ, you want to keep an eye on those high flyers, because they definitely have an influence in the NASDAQ. All right, guys, hope that helps. Let's see what happens today. We get some movement again. It was really nice and refreshing to see markets pull down the other day. And again, remember, I mentioned it was also oil. The oil stocks took it on the chin. They did reverse yesterday, but keep an eye on if you're looking for longs. I do like the builders right now on weakness. The LEN, the the LEN, the BZ Homes, the BZHs, the DHIs, the Toll Brothers, which is the TOL. Keep an eye on those. Some of the agricultural stocks are starting to move again. They're at resistance, looking to break out, like the Caterpillar, the DE, the CAT, the AGUs. Something to do with anything to do with agriculture looks pretty interesting, especially coming into the summer months. So you want to take a look at that. And I'll do a big analysis over the weekend on that. That might be a play going into the next couple of weeks. All right, guys, have a great day. We'll speak to you tomorrow. Take care.